Hey guys, Mike here. So another day in the market, another all-time high on the S&P and the Qs as they continue to push up. We'll go over a couple of things. One's going to be Tom Lee's new prediction, which I think is really going to stun you. And make sure you understand, like by him putting this number right here, I'm kind of like going, wow, he's being, to me, way more cautious than I would have expected, but it lets you know what the second half of the year can be like. And so keep that in mind, because I mean, he nailed June almost to the penny, right? So, and he got there faster than he thought. And so he's, again, I only bring the people that have the hot hand on here. You know, when Mike Wilson got leprosy, that's his words, not mine. You don't see him anymore, right? I think he might even retired. But, you know, you get these guys who get the hot hands, and it is what it is. When you go into a bearish market, trust me, Tom Lee would not have that hot hand because he is definitely a perma bull. Okay, but again, we'll go into that one. Tesla, Nvidia woke up, and I'll show you those two charts, which kind of trips me out. And then a few others, especially IWM, because something came out about that. And I want to show it to you and make sure you understand it, because I actually go one step farther than most people just to make sure you understand what we're looking at here. But before I forget, before we get into the economic news, I just want to say definitely happy 4th of July to everybody tomorrow. Please be safe, have fun, have a blast, all that good stuff. I know I will be. I will not be doing a video tomorrow or Friday, but I will be back for Saturday and Sunday's video, okay, as usual. Now, we did have economic news come out. That's why the yields fell off a cliff, because once again, eventually I'll be able to come out here and say we had good economic news, but you know, no, not happening. And you can see the Fed is getting what they want now, right? We had a lot of jobless data come out, right? Or a lot of jobs data, excuse me. And you can see initial jobless claims, continuing jobless claims, they are going up. This is what the Fed wants, for this to continue to go up now. You can see the initial jobless claims are starting to really get on the move now. Then, of course, you had what else happened? You had ADP come out, and you can clearly see, well, it came in less than what they expected. We'll see what happens on, I believe it's Friday, when it comes to government jobs and things of that nature. But, you know, clearly things are just slowing down. This is where it started. So I think the last 3 reports have been lower than what they expected. And so, again, you look over to the left. From 2021, they brought back all the jobs they didn't have. 2022 is down. 2023 is down. And so 2024 was looking pretty decent, right? And so, but again, if we go all the way to the left, this went farther back, we're basically just kind of getting back into the norms. Okay, that's what we're still trying to do, is get down to the norms. Okay, that's what we're looking at. We just got to, you know, give it time to get there. Now, you look at ISM manufacturing and ISM services. This is the first time in quite a while we have seen both now in contraction at the same time. You go back to any other time frame, 2020, the market crashed, we shut down the world. You go back before that, it was a recession. And so you can kind of see usually when both of those, because remember, services makes up 70% of our economy now. That's why you see it always does much better in manufacturing, going over at least the last 15 to 20 years. And it rarely does come down into contraction, okay? So that's something to make a note of right there. Now, getting into Tom Lee's new prediction, here it is right here. Let me know what you think.
You have a new target for the end of the year?
2025 earnings look a lot stronger than we thought at the start of the year. I'd say between now and year end, stocks should be higher. I mean, we've had a strong first half already, and second half won't be as strong as the first half, but we should build upon those gains. So, yeah, it looks pretty good.
So 5,800 for the year, what would that be the total return? If it's 15 now, so...
Yeah, so it's, you know, it's a little bit more than 20%.
Which would be after last year's...
24.
That's a couple of years no one really expected, I don't think.
That's right. I mean, that's painful for people who've been sitting in cash for 2 years, earning 5% because they missed out on a 50% gain, and that's 10 years worth of sitting on cash. So I think the end of this year is a little bit of a day of reckoning for those who've said, oh, I'm happy with my $6 trillion in cash, earning 5%.
And so we just had 2 more big day of gains, right? So we're basically up like 17% on the year already. And so he's only calling for about maybe 3 to 5% more, which, I mean, in the next 6 months, right? So it kind of lets you know, even he's cautious now, because he knows what seasonality looks like going usually from August, September, October. And then we usually normally have good November, December, but a lot of that's going to depend on what goes on with rates and, you know, how bad off if the data continues to drive down and all that good stuff. So that one I found very interesting, because we all know he does these huge targets. And so far, you know, give the man credit. He's been spot on with it. So we'll see if he loses the hand and he gets leprosy like Mike Wilson did. So let me know what you think, what your year-end target is too as well. So now going into very quickly the indexes, okay? Because you look, S&P sets a new all-time high again, but what is it going into? Here's that midline, right, where we were rejecting last time. It's coming up into it. We'll see if it's going to hit it on Friday. Remember, we are closed tomorrow. Okay, when you look at this, momentum-wise, you can see you got that bullish cross right there on the daily. Still needs to move up, so it has, you know, that swing up. On the weekly, we're right up here. This is where you really start cooking with Crisco. When you get up in this area, you can see it happen here. You can see it happen over here. You can see it happen over here, right? So that's what you're looking for, okay? And so momentum still is there, believe it or not, right? Financials are performing well. Other areas are performing well. And then when you look at the Qs, again, bullish cross on the stochastic on the daily right there. New all-time high. It's about probably around 2% away from the top of that channel right there. If we continue up in this, you can see we may be getting a bearish cross on stochastic on the weekly right there. We'll have to see. Okay, it hasn't completed it, but we'll see if that continues to happen or not, or we continue to stay up there and start moving up even more, which I know is hard to believe. But remember, July is a very seasonal part, is very, very bullish. And I've showed that to you. If you didn't see it, try to go back and find it. Now, when it comes to IWM, it's a whole different story. This is the non-commercial futures position. It's basically short, okay? It's below the zero line short. And so you can see it around -11. It's been much worse than that. But understand, people think, well, it's like that, you're going to get a rebound, right? Well, and you have this great, crazy rally. Well, understand, you can't tell the exact day, but you can get a good idea of the time frame on this. And here's what happened in 2019 when you saw that huge move down and they were really like net short, right? You had a 16% move, right? But it's still rough. Then you go in 2021, 15% move, still rough as can be, right? It doesn't move like the SPY and the Qs and all that stuff. And then look at it right here where they were super short, right? Coming out of 2022. And then look at this. I mean, God, super volatile. And then you finally end up with about 28% total. But just look at where it was going up and down, going back to zero so many times. So remember, IWM just doesn't move like that. So even if that thing starts to move up and they start to become positive and you see it hadn't been in positive territory like one time in what seems like forever, you know, then it's a whole different story because this environment is just rough. It's just rough for small caps, man. All right. What you got to have is, they're definitely going to do rate cuts, and then you'll probably see a run up into the rate cut is what you'll most likely see with IWM. Now, it isn't just Tesla, okay, before we get into that chart, that is having a good time right now. This is all EVs. Look at this right here. I'm talking about companies that have just been decimated. Their stocks have been decimated. XPeng up 17% in the same time frame of the last 3 to 4 trading sessions. NEO up 18%. Li Auto up 18%. There's Tesla around 24%. So, you know, it's not just Tesla right now, right? All of them are moving since those deliveries came out of China. And you can see another huge day up, another gap up day. I mean, just straight up. It's like Nvidia's chart, right? When it was running up like crazy. And like I said, once we break that trend line, I mean, you got another explosive move up. So there it is. And when we look at this in the volume profile, I hadn't got to this point right here on 255, 38 or whatever it is in that area. And another way to look at this is look at this inverse head and shoulders when you're trying to target where this thing can go if it continues to push up and the option flow continues to come in. It's the exact same area. The target's around like 255 right there at the very top. And so it still could continue to push. And that's what I was talking about yesterday. It's hard to call anything like this, and I wouldn't even bother trying, honestly, because the options market, you just see them, they're just continuing to push up. I even saw 300 calls being pushed today and stuff, and that continues to make market makers have to cover, shorts have to cover, all that fun stuff, and so it could continue to do that. But understand, when you see that volume gap at the bottom, if this thing does finally turn over, okay, that gap will be in play too for it to go back down. So that trend line is where I can look at probably for support first, okay? And you also have the 200 beneath that trend line as well if that happens. But if you make it over 255, look for 265 to be your next level. Now, it's like I told members this morning, which is funny to me, I'm not saying Tesla and NVIDIA can't move up together, but recently you're just seeing more and more of this. You saw Tesla start to roll over around 1030 as NVIDIA started to gain momentum. And it was obvious that the profits were going straight into NVIDIA, right? Because NVIDIA goes from being down like 1.5%, while Tesla's up some crazy, another 5 or 6%. It rolls over, NVIDIA goes up, and you can see it came up into basically where we talked about with that fair value gap right there and grabbing liquidity and stuff. But, again, I'm not saying they can't go up at the same time. They just recently just haven't been doing that. Okay, I've showed you the chart many times to prove it. But again, with NVIDIA, it is above that all-time high anchor VWAP now, which is a positive thing. Okay, now the question is as I draw this back out, was that the draw on liquidity, and we're going to come back down, or are we going to continue to push through this? And it's really just going to depend on the options market, right? Because right now Tesla's getting all the love, baby. Even Apple's getting a lot of love too, by the way. But if Nvidia starts to get those call sweeps coming back in, then there you go. It's going to start to move, and I just want to see if both of them can move at the same time. Because Tesla's had such a gigantic move, eventually it has to digest it. And I want to see if it starts to digest it, what happens to Nvidia. That's what I want to see. Now, Amazon, you might have saw, fell off a cliff this morning, right around, probably open actually, because the news came out. There's Jeff Bezos selling $5 billion more of Amazon stock. So, man, I think he sold more than $13 billion this year. That's a lot. So of course that was negative, right? And I mean, once it reached all-time high, that's when it came out. So again, we held this level right here. We're going to see if we're going to end up holding this to bounce back up above 200, because that is that psychological nice round number level. Sometimes you do see this happen, but you can see it's holding where we had drawn this out before. That will be support. That's happening. Now the question is it going to continue down, break this right and come up? Or because of Amazon Prime Day, as I've showed, I think at least show the members, that normally what happens is it runs up in Amazon Prime Day and then sells off. So that's just what we got to figure out with Amazon, but that's why it sold off. Now Alibaba, because a lot of people ask me about this one. This one right here, again, been in discount, had a couple of good days right here, needs to get above this level right here, around 76s, to get that market structure shift to the upside on a higher time frame. All right, and again, when you look at this, there's a couple different ways to look at this. If you can break that right there, come back down, obviously you like the retest to see that, then you finally get over this level right here around 78, 77, right, and then start to move, then you can finally have a chance to get back in the 80s. All right, now, again, a lot of that up there is going to be where it's probably going to get rejected if it ever gets back there. But you do see momentum, right? You got a bullish cross on the stochastic, sitting on your daily right there. On the weekly, you also have a bullish cross just happen, all right? And you can kind of see even stochastic is giving you like higher lows on it, right? Like trying to move up, okay? And so if this momentum continue, because all Chinese stocks are doing this right now, then that can happen. All of them have a huge sell-off. Another way to look at BABA, to make it even easier, is to sit there and say, okay, well, it's a falling wedge, right? So the target, right around what I said, it will probably be right around between 83, 86. If it can complete that, not saying it's going to have to complete all the way up, but that puts you where? Right in that area where I said it's going to be really tough to get through with all those gaps and fair value gaps and everything else. But I will admit, ADRs, like I've said before, they don't move like regular stock charts. They just don't. The moving averages don't seem to mean anything or anything else. So again, we'll see. Now, last one here is Snow. It's doing exactly what we talked about with this one. Come up in this fair value gap, we draw liquidity. That's where it's going to get reactions. That's where it's got reactions from the last 2 days now. And so the bigger question is, are we going to start to come back down? Because it has tested that trend line and successfully tested, okay? Are we going to come back down, draw liquidity beneath here? Or are we going to sit there and continue to finally move up and mitigate these fair value gaps here? That's really what we're looking at when it comes to Snow here. But honestly, consolidating right here in this area would not be a bad thing at all for the move to continue, because it still has momentum. No doubt about that. And you can see right there that weekly looks pretty good as well. I mean, it's a straight up shot, but it just means you got a damage chart and it's trying to resolve all of it. Now, looking at Fridays, we're closed tomorrow. You will definitely have red folder news, average hourly earnings, non-farm employment changes, and then the unemployment rate. So we'll get to see if it ticks back up. Let me know what you think. Maybe we do finally go over 4, because I believe it was 4 last time. So we'll have to see. But it's obvious, yes, the rates are slowing things down, trying to get it back to normal as usual. And so, as long as rates continue to fall and big money just keeps rolling back into what? These Mag 7. They're not even rolling into small caps, really. I hope that would happen eventually. But they're just going to safety, which is the Mag 7, Mag 8, 10, whatever you want to call it now, because they have all the cash. And they're sitting there, a lot of them with no resistance above them, right? So they can just easily continue to push these up. Even though you saw, like with ARK, which is going to be interesting as these go up, like she had to sell Tesla because in hedge funds and stuff, like there's rules written where you can't have one stock make up more of a certain percentage of the whole portfolio, even though she buys hot garbage with the stuff she sells Tesla on. But if you're wondering why that happens, it'll be interesting if other hedge funds have to start doing that with Microsoft and Apple and Nvidia and things of that nature. So anyway, hope you guys got something out of it. Have a great 4th of July, and I will see you Saturday. Hit the like and subscribe button on your way out. See you later.